Hi students, welcome to Sunil's tutorial. I'm Sunil Mirwani and today we'll be doing this chapter called as internal reco. We are doing sum number 7. We are doing sum number 7 in the books of Delta Limited. Journal. Before starting the sum, I prefer writing this on the right side so that I know on what side my capital reduction is going to come. Debit, credit. Let's start. They said that the following scheme of reconstruction was submitted and approved by the court. 11.5% preference shares or rupees 10 each fully paid were reduced to 14% preference shares of rupees 10 each, 6 per share paid. Debit what comes in. I'm taking in the old shares. 11.5% preference share capital account debit. Instead, I'm issuing new shares. 14% preference share capital. Okay, 11.5% preference share capital as per the balance sheet is 1,50,000. Right, and they are saying that they are to be reduced to 14% preference shares of rupees 10 each, 6 paid up. Now I have 15,000 shares. Someone please do 15,000 into 6, 90,000. So the difference is going to be capital reduction. To capital reduction, this is 60,000 being preference shares exchanged. Next, let's see the next sum. Next entry. 10% preference shares of rupees 10 each, 5 per share paid up, were reduced to 13% preference shares of rupees 10 each, 3 per share paid up. Debit what comes in. 10% preference share capital account debit. Instead of that, I'm issuing new shares. What are the new shares I'm issuing? 13% preference share capital. 10% preference share capital is given to you as 65,000. How many shares do I have? 13,000 shares. They are reduced to 3 rupees. 13 3s are 39. The difference is going to be 2 capital reduction. Someone please do 26,000 being preference shares reduced. Next, equity share of rupees 10 each fully paid were reduced to the denomination of 5 each fully paid. Liability going down, capital reduction on the credit side. Equity share capital account debit. To capital reduction. Right? Now, equity share capital account debit to capital reduction 5 each. So in that case, I had 20,000 shares. 20,000 into 5, 1 lakh. Being equity shares reduced. Next, 11% debenture holders agreed to accept 50,000 equity shares of rupees 5 each in full settlement of their claim. Debit what comes in. 11% debentures are coming in. Instead of that, you are giving them 50,000 equity shares. Debit what comes in, credit what goes out. To equity share capital. Equity share capital. Now 11% debentures are 3 lakhs. right? They are saying that they have to be given 50,000 equity shares of 5 each. That is 2,50,000. The difference is capital reduction. $50,000 being 11% debentures paid. Next, they are saying that debenture holders agreed to forego the interest due to debentures. Now, that means liability is going down. Liability going down, that means capital reduction on the credit side. So this is interest due on debentures account debit. Interest due on debentures debit to capital reduction. Right, interest due on debentures to capital reduction is 19,500. 19,500 being interest waived. Right, next let's move on ahead. They are saying that sundry creditors agree to forego 10% of their claim. Liability going down, capital reduction on the credit side. Creditors account debit to capital reduction. Right? Creditors is 4,50,000. 10% will be 45,000. Being creditors claim reduced. Next, let's move on ahead. The company recovered as damages a sum of 50,000 which was not recorded in the books. Recovered. Money is coming in. Bank account debit. Right? Damages. The word damages is not given to you in the balance sheet. Since it is not given to you in the balance sheet, you cannot use it in the journal. Instead, you will write to capital reduction. Right? The amount is 50,000. Being damages recovered. Right? Next, assets are we listed entry. Cost of reconstruction paid 2250. Paid. Money is going out. Now, you do not have the word cost of reconstruction in the balance sheet. Since you don't have it in the balance sheet, you cannot use it in the journal. So in that case, this will be capital reduction account debit. The amount is 2250. Being cost of reconstruction paid. Next, they said that assets are revalued as under. Land and building 2,50,000. That means land and building has been appreciated. Plant and machinery 2,75,000. It has gone down. Furniture 10,000 has gone down. Investments 90,000 has gone up. Debtors 3 lakhs has gone down. That means land and building and investments have gone up. Assets going up. Capital reduction on the credit side. So this will be land and building account debit. Investments account debit. To capital reduction. Right? Now, land and building is 1,75,000 and it has gone up to 2,50,000. That means it has gone up by 75,000. Then investments. Investments is 75,000 and it has become 90,000. That means it has gone up by 15,000. So 90,000 being assets revalued. Right, next let's move on ahead. The remaining assets have gone down. Assets going down, that means capital reduction on the debit side. So capital reduction account debit to plant and machinery, to furniture, and to debtors. Right? Plant and machinery. Now the old value of plant and machinery was 325. The new value is 275. That means 50,000. Then furniture. The old value was 15,000. The new value is 10,000. That means 5,000. And debtors. The old value was 3,15,000. The new value is 3 lakh. So 15,000. 70,000. Now, whether they specify or no, in fact they have specified in the next transaction, or all intangible assets and accumulated depreciations to be written off. So in the same entry I will do that. So this will be to goodwill. Goodwill is 80,000 and you have patents, which is 54,000. And profit and loss. To profit and loss. Profit and loss is 1,75,500. Right? Someone please tell me how much is this?
3,79,500.
3,79,500. Being assets revalued. Assets revalued. Right? Done. Let's make capital reduction account, guys. Capital reduction. Let's see this on the credit side. So on the credit side, you write buy 11.5% preference shares 60,000. On the credit side, buy 10% preference shares 26,000. Credit side, buy equity shares 1 lakh. Then buy 11% debentures 50,000. Next, this is buy interest due 19,500. Next, buy creditors 45,000. Then again buy bank
50,000.
3,000. Then on the debit side, to bank 2250. Then on the on the credit side again, buy land and building is 75,000 and by investment 15,000. Then on the debit side, to plant and machinery. To plant and machinery 50,000.
To furniture
To furniture
5,000. To debtors
to debtors
15,000. To goodwill 80,000. To patents 54,000. To plant and PNL last part to PNL
P&L.
1,75,500.
That's it. Okay. Let's see this. Can you please help me tally this?
4,40,500.
4,40,500.
58,750. 58,750.
58,750. This is to capital reserve. Journal entry for that. Since it's on the debit side in the ledger, in the journal it will come on the credit side, so this will be capital reduction account debit. This is going to be my 11th journal entry. Capital reduction account debit to capital reserve. Amount is 58,750. 58,750 being reduction written off. Capital reduction balance or written off. Let's make balance sheet wise. Balance sheet as on liabilities rupees, assets rupees, authorized share capital. Let's see this. Authorized share capital is not given to you. When you are issued and subscribed capital. Issued and subscribed capital. In that you have 11.5% preference share capital. That is going to be nil. First entry, first journal entry. Then you have 10% preference shares, which is again going to be nil, second journal entry. Now instead of that you have issued two new preference shares. 14% preference shares are going to be 90,000 and 13% preference shares 39,000. Right? Then you have equity shares. Equity shares was 2 lakhs and 1 lakh has been written off. So 1 lakh. Then you have issued another 2,50,000. So 3,50,000. So that's going to be 3,50,000. Then you have reserves and surplus. Right, in reserves and surplus, they haven't given you any reserves. You will have capital reserve. Capital reserve is 58,750. Then you have secured loans. Secured loans is 12% debentures. 12% debentures is 1,50,000 and we don't have an entry with 12% debentures, so that will remain as it is. Then you have 11% debentures. 11% debentures is 3 lakhs and 3 lakhs nil. It is written off. Then you have unsecured loans. Have you issued any other debentures? No. Right? Unsecured loans. Nil. Current liabilities. Under current liabilities, you will have interest due on debentures. That is nil. Then you have creditors. Creditors is 4,50,000. Have we done anything to the creditors? Yes. 45,000 was written off. So 4,05,000. Right? Next, let's move on to the asset side, guys. Right. Next, let's move on to the asset side. You have fixed assets. Amongst fixed assets, the first thing that you have is goodwill. Goodwill is nil. Patents. Patents is also nil. Land and building. Land and building was 1,75,000. You have increased it by 75,000. So 2,50,000. Then you have plant and machinery. Plant and machinery is 3,25,000. And plant and machinery, do we have? Yes, 50,000. So that is 2,75,000. Then you have furniture.
10,000.
Furniture was 15,000. It has been written off by 5,000. So 10,000. Then you have investments.
90,000.
Investments are given to you as 75,000. Do we have an entry? Yes, we have an entry with
15,000.
investments. 15,000, so 90,000. Then you have current assets. In current assets, the first entry you will have is debtors. Debtors is given to you as 315 and it has gone down by debtors of
3 lakhs.
3 lakhs. Then you have bills receivable. Bills receivable. No, I don't think we made an entry with bills receivable. So bills receivable is 1 lakh as it is. Then you have bank. Bank was 20,000. Bank
Debit side.
add 50,000, so 70 minus
2250.
2250. Someone do that. Then you have
60.
That's it.
67,000.
No, 70.
2250.
67750.
Next you have profit and loss. Profit and loss is nil, right? So, what is the carrying amount?
10,92,750.
10,92,750. 10,92,750. Right? We'll stop this here for the day. Thank you very much.